Jai Jirendra. Good evening, everybody. Welcome to this second lecture of the third season of Embrace the Changes with JCF. Today, the topic for the day is recent developments and updates under GST laws and Maharashtra Settlement of Arrears Scheme 2023. We have our own speaker, Shri CA Jitesh Jain, who would be speaking, and an expert chairman for the session, Pradeep Bhai Kapadia. Here, I would request President Apex JCAF, Shantilalji Kochar, to please uh, give the welcome note. Shantilalji.
Thank you, Iral. Jai Jain to everyone. And on behalf of the JCF, I welcome you all the participants on the Embrace the Change with JCF Series 3 on the topic recent development of GST and the settlement scheme which has been introduced by the government of Maharashtra. And today's speakers, I welcome our speaker also, Jitesh Jain, and chairperson Pradeep Kapadia, and president of JCF and past president of GSTPM. This is going to be a very good session, and those who have joined are going to get the benefit. And this is the third series which has been organized by the South Central Bombay chapter. And I also welcome Pankaj Jain, the president of Jain Chartered Accountant Federation chapter president. Once again, I welcome you all, also Amritji Porwal, secretary of JCF, and all the participants to enjoy this today's evening with the speaker, Jitesh Jain. Thank you very much.
Thank you, Kocharji, for your kind words. Now, let me have the present task of introducing today's session chairman first, Shri Pradeep Bhai Kapadia. A mentor to most of us, and I would say especially to me. A practicing chartered accountant for last over 37 years. He has been the proprietor of PR Kapadia and Associates, practicing in direct and indirect taxes. Senior partner with KAP and Company, Chartered Accountants firm. Past chairman, past president of the Goods and Services Tax Practitioner Association of Maharashtra. Currently, the president of Jain Chartered Accountant Federation, Mumbai. Past district governor of District 323A, Lions Club International, and past multiple council treasurer, District 323. Past president of Janta Ki Awaaz Foundation, Professional Cell. National president, sorry. Member of the board of Concern for Mumbai, an NGO. He has been on board of listed companies as well. Managing trustee of KPK and trustee of Smile, Spread a Smile Trust. Permanent trustee of Lions Club of Walkeshwar. Past special executive magistrate. Pradeep Bhai himself has a long list to go, but I'll have to cut
enough. Real enough. We have only to hear Jitesh today.
Yeah, and coming down to the task of welcoming Jitesh as well. CA Jitesh Jain, qualified chartered accountant, practicing chartered accountant, partner with Jain Ambawat and Associates LLP, qualified FAFD as well, having expertise of over 18 years in handling indirect taxes, VAT, service tax and GST matters, having experience of attending VAT assessments, appeals, MSTT, GST audit, transaction advisory, etc. He is also a qualified and arbitrator and mediator, which he has not mentioned, but I would like to gather it to the audience as well. Thank you, Jitesh, for accepting our request for being here. And over to you, Pradeep bhai, for your first initial comments.
Thank you, Hiral. Thank you also for your nice introduction. Though it was a bit long, but I think because that is the love that you have for me, that's why you have made it a little bit longer. But if you are a president of that foundation, the federation, I think you need not have to give the introduction. If one has to give his introduction, then I think you cannot be the president. So, Hiral, next time you could only say that, yes, Pradeep Kapadia, JCF President Mumbai. That also now within short period it would become immediate past president. So first of all, I'm really thankful to our Apex President also for being present. Though now Chovia time and even Amrit Porwal sir, the mentor of this South Central Mumbai chapter, and Pankaj Bhai, the president of this excellent chapter. I think this chapter is really is very vibrant, along with the Borivali chapter and this South Central. You all are doing wonderful job, let me tell you. And yes, this is the second lecture. First lecture, Pankaj Bhai was really excellent. Heads off to him, the way he has explained. And I know Jitesh has also, he has sent me the PPT yesterday night only. And I had the privilege at least to go through. And I'm so happy the way he has minutely given all this, the recent developments that are there and the updates under the GST law and yeah, Maharashtra settlement, that is the second inning that I will call you. That is first was there and second more, little bit more they have given it from 10,000 to 2 lakh and from that to 50 lakhs, that's there. But this recent, I think most of the 48th council meeting, whatever the suggestions and all that they have incorporated into it. And Jitesh has really nicely put everything into it. The effect of the changes, what was the old provision and what was the new provision. I think that would be very helpful to all these participants who are present. And I think people who are not present will start suffering from the, I would say, syndrome, FOMO syndrome of the feeling of missing it out to listen to Jitesh. I think the Jitesh has really the way he has given it to me, I have gone through, and I don't think so I would have to comment anything on that because he has minutely given everything. So Jitesh, I think salute to you. And what was more important, see, he volunteered himself, and this is what I think is the requirement. And this is what JCF, the platform that we are giving it to people. And I think Pankaj Bhai and Amrit ji and Hiral, they have given this platform to young people. And GST, let me tell you, it is for youth, not for us who have become gray now. So because we have all old stuff of BST, VAT and all that, which takes time to get out of it. Because this is now the destination based, which was on the consumption basis. Everything has changed now. So we will have to really, I think this is for the youth, and Jitesh has really nicely put everything. And that is what I said. And giving opportunity, this is what JCF does, giving a platform to people to present their skill. And everyone, I think, not now Jitesh, now everyone should follow this and they should start accepting the challenges. This is because you can't get such a platform anywhere. And this is what we are giving it, Jain Chartered Accountant Federation. And we are now really spreading our wings. So it would be beneficial. It is a win-win situation for, I think, for everyone. And I think one has to take up this challenge and start presenting themselves, present their skill. Thereby, it's not only helpful. Let me tell you, Jitesh, I have gone through it and I have upgraded myself, to be honest. Otherwise, I would not have taken that trouble of going through so minutely. But because I am being given this platform, I have gone through it. And it is for you also, Jitesh, I think, because you must have also gone through, more ideas comes to your mind. And the way once you read any act or this thing, you get different meanings out of it. So it is also helpful everywhere, wherever, because once if we have presented our paper and all that, we become more confident. And Jitesh, I think this is what is the benefit of Jain Chartered Accountant. So I will appeal to everyone who is still not a member. to join, though as a president now, I'm talking not as a chairperson of this session, to join this JCF, it's only 1100 rupees life membership. And where you get such speakers, this is the platform where you get it. So Jitesh, keep it up, heads off to you. And wherever I think I may not be required, but wherever my input, I would be very happy to assist her to give my whatever our knowledge that I have, I can part it through. So thank you very much. And Hiral, now you can navigate the proceedings. I think I've taken more than 5 minutes. If I'm that, I'm sorry about it. Thank you.
No, sir, you are absolutely on time. Thanks for the wonderful words. Now I would hand over the baton to the learned speaker for the day, CA Jitesh Jain. Jitesh ji, all.
Mute.
Jitesh ji, you are on mute, sir.
Oh, sorry.
Unmute.
Jai Hind, and thanks JCF, entire JCF family for giving me an opportunity to share my views on the GST amendment. And I thanks Pradeep Bhai also, and personally Amrit Bhai and all other Santilalji Kochar and all other my fellow friends who helped this in initiating this seminar and giving me an opportunity. So I'll try my level best to give whatever best I can give. With this, I start. I don't want to waste more time. I'll start with I'll just explain the three things I'm going to take in this seminar. First one is the changes in the union budget, changes in the GST in the union budget. The second one would be changes by notification, implementation of amnesty scheme under the GST. And the third one is the amnesty under the VAT and Allied Act. I start with the first one, in changes in the GST Act in Union Budget 2023. The first change is relating to the composition dealer. Earlier, first I'll explain what was the amendment has been made. In section 10, the amendment has been made where the restriction to the composition dealer for doing their business on e-commerce platform was there. Now it has been removed. So the effect of amendment is that the composition dealers now can sell their goods, which was earlier not allowed, through e-commerce operators. Now there is a key takeaway. The key takeaway is that the services are still not allowed to be composition dealers cannot render services through e-commerce operator. Let's understand this by way of an example. Suppose a retail counter of hardware is there and he is unregistered under a composition scheme. He generally supplies hardware items to retail counters. He, by virtue of this amendment, he can register on the e-commerce operator like Flipkart or Urban Clap or any other like Amazon, and start selling his product despite having composition scheme, start selling his product of say hardware items. So but he cannot render exclusively only services through e-commerce operator. For example, if someone calls that he wants to avail services of plumber also for fitting, then he cannot render. He can sell the pipe or tap along with the services of plumber, both, but exclusively service he cannot render through e-commerce portal. So this is the change, and this, although it is not mentioned in the amendment, but they have included only goods to be allowed to be sold through the e-commerce operator. Now, the hope it's clear, and I'll move to the next amendment. Next amendment is relating to amendment in the section 16.2. In section 16.2, although this is only a procedural changes, not much changes are made. Earlier, when a recipient buyer fails to pay supplier within 180 days of date of invoice, then he was required to reverse the input tax credit by increasing his output liability. Okay. He was earlier it was mentioned in the act that he was required to add to the output liability. Now the amendment has been made in act so as to now going forward the returns, the ITC which is required to be reversed is to be reversed in column in table number 4B of GSTR 3B. Instead of adding it to the output liability, now it is to be required to be reduce it from the ITC claim. This is a procedural change, not much changes. There is no effect on the financial.
Can you share the screen of
Jitesh ji,
presentation?
please
Sorry?
share the PPT.
Okay, let me share the PPT also. Hiral,
Yes, sir. Yes, sir.
please add that other ID, that caps one.
Okay, sir.
Make it admin. Yeah.
Sir, done.
Yeah. Can you see the screen?
Sir, your screen is visible. Please start the PPT. We are not able to see the PPT.
Now?
No, sir. You will have to check the sharing thing.
Let me check the sharing. Now is it visible? I had already.
No, sir. In the share screen, you select the screen that you want. Share it again, sir, please.
Let me share screen. Okay. Now?
Yes, sir.
Okay.
The first screen is there.
Okay.
Yes, sir.
Okay. Now.
Perfect. Thank you.
Okay. Now, this is, I think now it's clear, right?
Yes, sir.
Okay. Now, thanks, Cyril, for helping me out with this. Now, the ITC is required to be reversed in 3B instead of adding it to the output liability. The why these changes have been made? Basically, this change is made to align the return filing system of GSTN with the provisions of the Act. Earlier, when we were students, Act were first made and the system were implemented later on. They were aligned according to the provision of the Act. Now, return filing system GSTN is there and the Act is being implemented. The Act is being amended to align with the system, the return filing system. So it's happening otherwise, but we have to accept it and we have to go ahead with it. Now the next amendment is relating to amendment in explanation to section 17(3) of the GST Act. Now, what this explanation is? In section 17(3), an explanation to section 17(3), the supply made from bonded warehouses have been included as exempt services. Now, what does it mean and how does it affect? See, and let me explain first what is supply warehouses are. Whenever an importer imports goods from place outside India to a place in India, then he can store his goods before taking delivery by filing bill of entry for home consumption into a custom bonded warehouses. There, without payment of IGST or custom duty, goods can be imported. And then a supply can be made from those custom warehouses. Now, when a supply from those custom bonded warehouses is made to a buyer located in India, in that time, tax is not required to be levied on the supply made from bonded warehouses. The reason being, this supply is included in Schedule 3 of the GST Act, which is known as bonded warehouse in short, or a supply or warehouse goods to any person before clearance of goods for home consumption. So whenever imported goods are stored in bonded warehouse, and when it is released or sold from bonded warehouses, on output supply, no tax is levied. Okay. So since no tax is levied on output supply, government wants to curtail the input tax credit on ITC availed, a common ITC availed on this turnover. Okay, so what they have done, they have included the turnover made from the custom bonded warehouse in the exempt definition of exempt supply. Now, this exempt supply definition is different than the exempt supply turnover under section 2. Here, it's only an explanation they have added for the limited purpose of reversal of ITC. It has nothing to do with the exempt supply definition. Here, for the limited purpose of reversal of ITC, of common ITC, they have included they have included this bonded turnover from bonded warehouse to the definition of exempt supply. Now, with this, there's another kind of turnover also which importer do, which is commonly known as high seas sale. What happened? Instead of storing goods to a bonded warehouse, importer can directly import the goods, and by transfer of document of titles during their movement from place outside India to place inside India, they transfer, they sell the entire consignment to a buyer. In that case, no tax is required to be levied, because this is also a no supply transaction covered under, no goods or no supply transaction covered under Schedule 3. Since this amendment now brought is covered only bonded warehouse transaction, in my view, the the turnover of high seas sale is not required to be added to the exempt turnover, because they have specifically included clause 8A, which covers only transaction of supply made from warehouse goods, not the 8B, which covers the high seas sale transactions. So the effect of this is a common credit in respect of supply made from bonded warehouses is required to be reversed, whereas supply made from high seas sales, although the transaction is similar, in both the cases, the buyer who takes delivery is required to pay IGST, and supplier is not required to levy any tax on the output supply. But still, on high seas sale, the transaction is not required to be added to the input tax, to the turnover of exempt supply, and no reversal of input tax credit is required to be made. Now, there is one more. By this explanation, we can also infer the intention of the board is that whatever supply is mentioned in no Schedule 3, which is known as activities which are to be considered neither goods nor supply, ITC is available. Earlier, we were of the opinion that if there is no tax on the output supply, and if it is not a no supply case or the transaction relating to neither goods nor services, then the ITC cannot be allowed because there is no tax on the output services. But now with this explanation or with this amendment, we can infer that ITC in respect of no supply transaction, unless specifically barred, it can be availed. Here, suppose an importer imports the goods under high seas. He opens an LC, bank charges are levied. On bank charges, IGST or CGST, whatever tax is levied, it can be claimed as input tax credit. Now, only thing in case of bond, if dealer chooses to store the goods in the warehouse and custom bonded warehouse and makes the supply from those warehouse, And in that case only the supply made, the turnover of the supply made from bonded warehouses is to be required to be added to exempt turnover. And if it is sold through high seas, no, the turnover is not required to be added to the working of tax exempt supply, and entire ITC can be claimed. Now we'll move to the next amendment. Here, next amendment is relating to the blocking of credit on CSR activities. Now the government here doesn't want to give benefit of expenditure incurred on GST on CSR activities. Input tax credit is specifically disallowed by adding this point. But by adding a new clause, the government has added a new clause in block credit 17(5)(f). Now FA. Now since this new clause is inverted with a date to be notified, this is not implemented immediately. A date notification will be issued for implementation of this, and CSR activity and expenditure incurred on CSR activities would be considered as a block credit, and no ITC would be available in respect of that. Now, whether this is a prospective amendment, since a new clause has been inserted, no explanation has been added, I am of the opinion that this is a prospective clause. And what about the CSR expenditure with incurred in the earlier year? Can the credit be claimed? In my view, since this is a prospective amendment, ITC in respect of the CSR expenditure is available because the expenditure has been incurred to meet the statutory obligation under section 135 of the Companies Act. So to meet the statutory obligation, it was for the furtherance of business. This was mandatory for the furtherance of business. Hence, this credit is, in my view, is admissible, although there are contradictory rulings, advance ruling, where the department, where this expenditure has been considered to be not to be of business, furtherance of business, and ITC is not to be allowed. But there are both advance rulings. So we can safely presume, unless and until it is decided by a court, it will be a matter of litigation. So safely we can presume it will be allowed in future. CSR expenditure is also not allowed under Income Tax Act. So considering the same, here also they have disallowed the, and I mean ITC on, I considered the ITC under the block credit on the CSR expenditure. Now we'll move to the next amendment. Here it's this is a beneficial amendment. This is relating to the registration. Now their amendment has been made in section 23. What is the amendment? Amendment in section 23, which has been given an overriding effect over other provisions. Other provision means section 22 and 23. Why this amendment has been brought? The reason for bringing the amendment is, in section 23 provides for person not liable for registration. There were two types of person who are not liable for registration. But there was a contradiction in section 24. I'll give you an example. A farmer who supplies agricultural produce who was not otherwise required, because the item is wholly and exclusively exempt item, he was not required to obtain registration. But suppose he is having some amount of RCM liability, then by virtue of section 24, he was liable to get his registration. So to avoid this conflict in two provisions of registration, now this beneficial amendment has been made, and section 23 has been given overriding effect over section 22(1) and section 24. So by virtue of this amendment, now if two types of person will not be required to take registration. So first type is, what are the two types? First one is the person who are wholly and exclusively engaged in the supply of exempt goods and services. They are not required to obtain registration. even if they have got the RCM liability. Second, a agriculturist who sells the agricultural produce, then exclusively sells the agricultural produce, then he is not required to levy, obtain registration, just because he is also covered under interstate supply in section 24, like interstate supply of goods or RCM. So what happened? This basically why this amendment has been brought. There was a small farmers who were on the border areas of the states, so they were selling their produce in the interstate. So by virtue of section 24, they were liable for registration, although they were not having any taxable turnover, but still they were liable for registration because of section 24, which provides that interstate supply, a dealer making interstate supply is required to obtain registration. By virtue of this section, now these small traders and farmers will not be required to obtain registration who are dealing exclusively in exempt goods. Next amendment is related to, now this is amendment which is in line with this amendment. The next amendment is in line with income tax. In income tax, we have got time limit of furnishing returns. Like for financial year 20 to 23, today we cannot file the return. The similar earlier under GST Act, there was no certain provision for time limit for filing the returns. Now with this provision, now they have introduced the time limit beyond which the returns cannot be filed even after payment of late fees. So what are the returns? There are 4 returns which are covered. First one is GSTR 1, section 37(1), GSTR 3B, section 39, annual return, just section 44, and section 52, return by e-commerce operator. Now all these 4 returns are now, they have set a time limit of 3 years from the due date of filing of returns. Now, what is the 3 years? This 3 years, whether this amendment would be retrospective or prospective. In my view, this amendment should be prospective, not retrospective. If it is held to be retrospective, then returns for the period of financial year 1920 onwards, earlier to 1920 cannot be filed, because now 3 years have elapsed. So I believe this notification will be issued with the prospective effect. And here the government has retained the power of extending this due dates to another period in consultation with or as recommended by the GST Council. So central government can extend the period. Now this similar provision has been made applicable for GSTR 1, GSTR 3B, and GSTR 9 and GSTR 8. Okay, so now we'll move to next amendment. This amendment is relating to refund application. Now I'll explain in brief what was the earlier provision and why the changes has been made. Earlier, while processing the refund application, the proper officer was required to allow 90% of the refund claim after reducing provisional credit from it. Now, what is provisional credit? Provisional credit means when the credit has been claimed by the buyer, but supplier has not paid the taxes. Now the question will come, how is it possible, particularly when era of 2B, when the credit can be claimed only after filing 2B? I'll come to that subsequently. I'll explain. Now the amendment has been made that application is to be processed without giving any effect to the provisional credit. The entire refund, say 90% of the refund file is to be allowed. Now I'll come on the provisional credit. What is the provisional credit? Section 41, Section 16 and Rule 37A has been introduced to give effect to this provisional credit. What it is? When a buyer claims and credit, section 41 allows it on the self-assessment basis. Only thing, if a supplier, if he doesn't make payment of tax up to 30th of September of the next year, then the buyer is required to reverse the credit by 30th of November. Let's understand with this with an example. Suppose a person has claimed ITC finance for financial year 22-23 and supplier has not paid the taxes. In that case, this buyer is required to, the supplier is required to make the payment by 30th of September along with interest. And if he doesn't pay, then the buyer is required to reverse the credit by 30th of November without interest. If he doesn't reverse by 30th of November, then interest will be applicable. Now, how is it possible in the era of GSTR 2B? Let me explain. This GSTR 2B is also not the full condition, but it's one of the condition of allowability of ITC. There are other conditions also, like receipt of goods, services, payment to be made by supplier. Now, this is the most important condition. If the payment is not made by the supplier, ITC cannot be claimed. This is the provisional credit. Now, provisional credit can be claimed. Now, in 2B, how it is appearing and you're claiming it, what happens? Some dealers file GSTR1, but they do not disclose the turnover in GSTR3. In such cases, your 2B will reflect the ITC, whereas despite the supplier not making the payment. In such cases, input tax credit can be claimed by the buyer up to 30th November. I hope it clarifies, and if any queries are there, we'll definitely take over at the end of the session. Now we'll move to the next amendment. This is relating to computation of interest. What happened? When you make an application, I'll explain the amendment first. The amendment is made in section 56 relating to provision of manner in which interest will be calculated. The period of delay will be calculated for computing interest on delayed refund. So what happened when a dealer makes an application, a proper officer is required to issue refund within the period of 60 days. If he doesn't issue a refund within the period of 60 days, then as per law, he is required to give interest. Now, but there is no provision as how this interest is to be calculated. So the central government will be coming up with a manner, and subject to such conditions and restrictions that it will deem fit, they will provide how the period of delay would be calculated. I hope that they don't reduce drastically the interest despite having delayed in the issuance of refund. Now we'll move to the next amendment. This is relating to introduction of penal provision on e-commerce operators. What happened? E-commerce operators route millions of transactions through their portal. There is no penal provision, specific penal provision if they make supply of certain goods or services, which is not allowed to them. Now, what are the services or what are the contraventions which will attract penal provision is mentioned here. First, if an e-commerce operator allows their platform for supply of goods or services or both through it by an unregistered person other than the person specifically exempted by notification. Second, allows an interstate supply of goods or services or both through it by a person who is not eligible to make an interstate supply. And third, fails to furnish the correct detail in the statement to be furnished under section 4 of section 52 relating to outward supply of goods. Now, friends, this point 2, if you'll read it again, in first amendment, they have allowed the composition dealers to be business to be routed. They have allowed it. Now here they have introduced penalty provision. So there is a one minor difference. If you check here, the second point, they have included interstate supply of goods. Means composition dealers cannot make interstate supply of dealers through e-commerce operator. In fact, composition dealers cannot make supply through interstate supply. So this is the provision, and penalty, although meager, rupees 10,000, but they have introduced it. We'll move to the next amendment relating to section 132. Now this is decriminalization of offenses under the GST Act. At present, 3 offenses have been introduced for decriminalization. It means that no prosecution can be launched on contravention of these 3 specific provisions. Now, what are these provisions? We'll go. First, 132D, obstruct or prevent an officer in discharge of his duties under the Act. Second, tamper with or destroy any material evidences or documents. Fails to supply the information which is required to be supplied under the Act, or when it is supplied, it is considering it to be true under bona fide merit, a false information is supplied. So if any of these offenses has been committed, a penalty, now onwards, a penalty can be levied and prosecution cannot be initiated. Now, amendment has also been made to increase the monetary threshold limit from existing 1 crore rupees to 2 crore rupees for launching of prosecution for offenses under this Act. It means that if any offenses has been committed listed in section 132, then prosecution can be launched. However, if the text of the total amount, the amount of effect is monetary threshold limit is 1 crore. If it is below amount, the amount is lower than that, then the prosecution cannot be launched. Now, further, this limit is not applicable in case of offenses relating to fake invoices. Next amendment is relating to debarment of a person involved in offenses relating to issuance of fake invoice from making application from compounding. It means a person who has committed an offense of issuing fake invoice, he cannot make application. Earlier there was no bar. Now they have specifically mentioned that a person who has issued a fake invoice cannot make compounding application. And the second amendment is changing the window. Earlier, the window of compounding was 50% of the tax compounding fees, amount payable for compounding. This window was 50% of the tax involved to 150%. Now this window has been reduced from 25 to 100%. So this is a beneficial amendment, although I don't know how many people have taken the advantage of it, but since the GST is a new act, so I mean the not new act, but rather the implementation is done now. Hope now these offenses people will go for compounding offenses. Next amendment is relating to section 158. Earlier, under the GST Act, there was no provision to share the information to any authority. Now this sharing of information has been made legalized. Now amendment has been made. Now what information can be shared? There are first 3 types of information can be shared. First, whatever information available at the time of registration of dealer. Second, the information submitted by dealer while filing the return of outward supply GSTR1, GSTR3B, e-way bill, e-invoice, and any other statement furnished on the GSTN portal. And government has also mentioned that if any other information, if they prescribe, they can be called for. It can be shared rather, but these information will be shared only after obtaining consent of the registered taxpayer. And how this consent would be obtained, it will be prescribed subsequently by way of notification. Now, the next amendment is relating to Schedule 3. Now, here, this is a beneficial amendment. Here, the supplies of 7 and paragraph 7 and 8 to the and explanation 2 to the Schedule 3. Schedule 3 is relating to the activities relating to no supply of goods, neither supply of goods nor supply of services. Now this schedule has been amended, and this 7 and 8 has been amended. This effect has been given with retrospective effect. It means this is very beneficial provision. Earlier there were litigations going on that here the paragraph 7 is relating to merchant merchant trading transaction. I'll explain that what it is. First, this following 3 types of transaction are considered as neither goods or services with retrospective effect from 1st July 2017. First, merchant trading transaction. What is merchant trading transaction? Suppose a person in India buys goods from Japan and sell it to Korea. Now what happened here, the good doesn't come into the territory of India, so GST cannot be levied. Now they had specifically included this in no supply. Hence, a person who supplies goods by procuring it from Japan and selling it direct out and out of India, in such case, this transaction are treated as no supply transaction. ITC, in my view, on this transaction, like suppose you have paid a brokerage in India to a person who has facilitated this transaction, then in my view, ITC on this transaction would be allowable, although there is no output tax liability, because because this transaction is not included in exempt supply, neither explanation to section 17.3. Now we'll move to next amendment. This is relating to bonded warehouse. If a supply has been made from warehouse cost, that is a bonded warehouse, then this supply would be treated as no supply and no tax is required to be levied with retrospective effect. Second, the third point, high seas sale, the supply of goods by consignee to any person by way of endorsement of document of title to the goods. That is, goods are being sold during their movement before making clearance for home consumption. In that case, tax is not required to be levied, and goods can be cleared without payment of without levy of tax. And the tax would be paid by importer or the buyer who buys goods from the original importer. We would file the bill of entry for home consumption. He will pay IGST on import of goods as if he has imported the goods. We'll move to the next amendment, changes in integrated tax. With this, changes in CGST Act has been completed. Now, changes in IGST, there are only 2 changes. First change is relating to tax definition of unregistered person under online OADIR services, online information and database access or retrieval services. Here the definition of unregistered person has been changed, and unregistered person includes a person registered solely in terms of closed foods. This means a person deducting TDS under GST. Who are the person liable for deduction of TDS? Generally, only they are only PSUs has been notified. So if any PSU is also, if any PSU is obtained registration only for the purpose of deduction of TDS, then it is also covered to be unregistered person for the purpose of non-taxable online recipient. Now, second amendment is relating to the definition of change in definition of OIDAR. The definition has been changed and the scope has been widened. Now, the words supply, essentially automated and involved minimum human intervention has been removed. So the online information and database etc. retrieval services means delivery is mediated by information technology. It's like a cloud services or the Google services or Amazon services. These are the online database access services. Here, the definition has been included to omit those two words. So there is not the definition has been increased to meaning of the database access or retrieval services. The effect of this would be that this would cover the wider net of online database access services. Earlier, which were not covered in this OIRDR services, now would be covered. Next is clause 144 of the bill. It's proviso of section 12.8 has been omitted. Now, what it is? The first, let's understand by this entire provision. Let me understand with the help of an example. Suppose a supplier, an exporter who is located in West Bengal, who exports goods to Singapore by availing transportation of goods services by transportation of goods services from a supplier located in the West Bengal state. So what used to happen? He used to generally levy CGST and SGST instead of IGST. A circular was issued that where a transportation of goods is involved to a place outside India, in that such case, place of supply should be place of destination of goods. It means in such case, IGST is required to be levied. A circular number 184/16/22 dated 27 December 22 was issued, and they have clarified this, that even if supplier and buyer and recipient of service, that is the exporter, both are located in the same state, IGST is required to be levied. However, now the amendment has been made. So basically this circular has been now nullified. The effect of this circular has been nullified. Hence, if a supply of service by way of transportation of goods to a place outside India made by a supplier located in one state and the recipient located in the same state, IGST is not required to be levied. CGST and SGST is required to be levied, because the proviso has been deleted. Earlier, this proviso has created a lot of confusion. CBIC was forced to issue a circular, and now the effect of circular has been done away with. So now this is, with this, I completed all the changes made in the union budget in GST. Now we'll move to next agenda relating the GST amendment made on 31st March 2023. It's relating to the amnesty scheme. The CBIC has issued 8 notifications on 31st March 2023 to give effect to various recommendations made by 40th GST Council meeting. There are major two effects by this 8 notification, 2 changes have been made. First, amnesty scheme has been given for regularizing various non-compliances under the GST Act. And second change is limitation of issuing order under section 23, which has been extended. Now, this is very troublesome for the assessees, because 17-18 notices can be issued up to 31st of December. We'll come to that later on. First, amnesty scheme. under the GST Act. Under the GST Act, amnesty has been provided only for the procedural non-compliances. So if there is, there is no benefit or waiver in respect of late fees, interest or tax. Just a window has been provided that up to 30th of June, all your earlier non-compliances can be regularized. So what are the forms which can be or who are available to take, who can avail the amnesty? And what are the forms for which amnesty is available? Now here, under the scheme, two types of dealers have been given benefit of. First, a person who is having turnover, aggregate turnover up to 5 crore rupees. In that case, he is required to pay late fees of rupees 25 per day, subject to maximum of 0.02%. That is 10,000 rupees. 10,000 under CGST and 10,000 under SGST. A dealer who is having turnover exceeding 20 crore rupees, then minimum penalty in that case would be 20 rupees per day, subject to maximum of amount calculated 0.02% of the turnover. Here also the maximum penalty is restricted to 10,000 rupees under CGST and 10,000 under SGST. No benefit has been given to the person who are having aggregate turnover exceeding 20 crore rupees. So for them, late fees is as usual 200 rupees under CGST and 200 rupees under SGST per day, subject to maximum of 0.2% of the turnover within the state. So here the late fees is applicable not on the aggregate turnover, but it is to be calculated not on the aggregate turnover, but on the turnover within the state or union territory. Now, this late fees is relation to the annual filing of annual return in GSTR 9 for the financial year 17-18 to 21-22. But the only condition is that the annual return has to be submitted by 30th June 2023. Next, amnesty to final report. Now, who are dealer requires to file GSTR 10? The dealers whose registration is cancelled. So in case of cancellation, order has been passed and within 3 months, they are required to file the final return. But if this return is not filed, then penalty of rupees 10,000 was to be levied. So here under amnesty scheme, that non-compliance can be regularized by filing the pending return by 30th of June. No late fees is required to be filed. Next amendment, next benefit under the amnesty is relating to filing of GSTR 4. The GSTR 4 is required to be filed by a composition dealer, and if he has not filed the annual return for any year from 17-18 till 21-22, then he can file the annual return by 30th of June without levy of, without any additional late fee if he doesn't disclose any additional taxpayer under GSTR 4. If he discloses any additional tax payable under GSTR 4, then late fees in that case would be 250 under CGST Act and 250 under SGST Act. Next amendment is relating to amnesty in form of one-time extension in time limit for filing application for revocation of cancellation of registration. What had happened? Many people who have not filed their returns in time, registration for them has been cancelled by the GST officer. Those cancelled registration can be revoked by filing an application within 30 days. Now, if the application is not filed, then appeal can be filed for cancellation of delay within the prescribed period for appeal. But if there is a delay in filing appeal, then such cases, the appeals were rejected by the appellate authorities. Now, with this amnesty, a one-time extension has been given to all the dealers, whether they have filed revocation application, whether or not they have filed appeal, whether or not their appeal has been decided and dismissed against them. All the dealers those who wants to restore their registration can avail the benefit of this amnesty. The only condition is they have to file all their pending returns till the cancellation of registration along with interest, tax, interest and penalty. It means there is no waiver in late fees in filing GSTR 3B. They have to make payment of late fees by filing GSTR 3B. And after filing this GSTR 3B, they can apply for revocation of cancellation by 30th of June and their registration will be restored. Now we'll move to next amendment, next amnesty scheme benefit. It's deemed withdrawal of the best judgment assessment. See, any registered person in whose case the best judgment assessment order has been passed under 62 and he has failed to file GSTR 3B within 30 days of service of order, then now application under the amnesty can be availed now, so that the order passed under the ex parte assessment or the best judgment assessment would be annulled or the cancelled, even if he has filed the appeal or his appeal has been rejected. In that case also, a registered person can file application for withdrawal of the best judgment assessment if he files the return in 3B till date of for the period for which best judgment assessment order has been passed. If he files the return for that period and makes the payment as per the return along with tax, interest and late fees, then in that case the best judgment assessment order will be deemed to have been withdrawn. Now this is a beneficial provision for the persons who have been served with the extraordinary demand by way of ex parte assessment or the best judgment assessment. Next amendment is relating to extension of limitation of passing orders under section 73, that is non-fraud cases. Here the time limit of passing order for the year 1718 to 1920 had been extended. These are the extended due dates. For 1718, the extended due date is 31st December. For 1819, the extended due date is 31st of March 2024. And for 1920, the extended due date is 30th of June 2024. With this, all the amendment or notification, all the amendment is covered in the notification issued on the 30th of March 23 has been covered. Now we'll move to the last topic of this session. Maharashtra Settlement of Arrears of Tax, Interest and Penalty or Late Fees Act 2023. Basically, state government has issued amnesty scheme for the taxes administered by the VAT Act before the implementation of the GST Act. Now, this amnesty scheme will be applicable from 1st May 23 to 31st October 23. The payment is required to made between 1st May 23, 31st of October 23. And application is required to file by 14th of November 2023. So under this scheme, the applicable laws are VAT, CST, profession tax, entry tax, luxury tax, sugarcane purchase tax, etc. No amnesty scheme for octroi or LBT dues. And payment is to be made by 31st of October. After April, a payment is don't go in hurry. Don't make payment before 30th of April. It is to be made on and on after 1st May. Otherwise, it will not be considered as a requisite amount under the amnesty scheme. The benefit of this scheme is a complete waiver of arrears has been given, where arrear of 2 lakh rupees or less per year, where there are dues of rupees 2 lakh per year. It is not per assessee, it is per year. So if 2 lakh rupees dues are there, then it's automatically waived. No application is required to file before any authority or without making even any application. So it's very beneficial provision. Now next here, dealers having arrears up to 50 lakhs are given a lump sum option that if if their tax component is very high, then they go for lump sum amount of 20% payment of total dues, and remaining 80% dues will be waived off. But then application is required to be filed under that case. Now this is a table where one-time payment or even the installment option is given, and one-time payment option is given, and lump sum option is given. But lump sum option in this table, you can see lump sum option is not available in case of installment. Here, because it is a lump sum, you have to make 20% make payment of 20% of the total dues. Whereas there is slight change in the periods, because a period before 1/4/2005, that is before VAT, the BST era, there the benefit are more. In case of disputed dues, 30% of the admitted disputed dues are required to be paid, along with 10% of interest and 5% of penalty. 100% of undisputed dues are required to be paid. In case of period after 1/4/2005, that is VAT period, 100% of the undisputed dues, 50% of the disputed dues, 15% of the interest, 5% of the penalty, 5% of the late fees. Now, dealer can assess their best composition, which will be more beneficial option. Either they can go for lump sum or based on this. I would suggest a dealer is first required to check whether his tax, what is the tax component in the total demand. If tax component is very high, I would suggest he should go for lump sum option. If tax component is very low, then in that case, this bifurcation can be availed of. For example, if there is a dues of 1 crore rupees, which includes 5 lakh of tax, or say 15 lakhs of tax, interest and penalty of remaining amount, and then in that case, you can avail the benefit of based on this. Whereas if the tax amount is very high, say 50%, and interest is 50%, in that case, you can avail the lump sum option. Now, what is undisputed tax and what is disputed tax? The disputed tax is the tax wherever the assessment order has been passed and officer has raised the demand. Undisputed tax is the tax where dealer himself has filed the return and admitted that this tax is payable by me, either in his returns or in his audit report. If any admitted liability has been admitted, or the tax has been collected by him. If tax has been collected, then this is the undisputed dues. Whereas if tax has not been collected, then it is an undisputed dues. We can move to next option. Next, this was the end. So with this, I have completed my session. I hope it was, which was I meet up to my expectation, and the participant have added some value addition from this.
Definitely, Jitesh ji, it was a very nice session. Now, I would request the chairman of the session, Shri Pradeep Bhai Kapadia, to highlight his comments, please.
Nothing much to comment, but what I have said that yes, Jitesh has really presented the paper in an excellent manner, explaining everything in detail that I already shared in the beginning. But that are two, three things which is not related to there, but I'm just in a general, see what is the dangerous thing which is there, which is that sharing of information. Let me tell you, now they want to connect everyone for everything. Now for income tax side, your GST, then your customs and all that. So now they are not leaving any place for you to do any planning. Let me tell you, planning, you understand what I'm trying to tell you. So, but that is what now they are blocking it. So this sharing of information, which they have now brought into it, I think that is one of the dangerous things which is there. So one has to be now very careful, even to my chartered accountant friends, to advise people. They have to be very careful about all this, because now they have, see, though this sharing was already, I think this is maybe now they have stated openly, but it was being shared. I think we must all have been getting notices from different sides whereby they have been talking about this, that you are from income ITR, this doesn't tally, and your GST doesn't, your turnover doesn't tally. All that was there only, but now they want to expand it and get more information. So that is what is there. And regarding this, I think one application that you don't have to make it if 2 crore, I mean, 20, what is that?
2 lakh.
2 lakh rupees. But I think even prior they have said 10,000 and no application. But it was a difficult, they have never been doing it. Let me be honest. I think one has to at least inform the department that yes, my this thing liability is below 2 lakhs and all that. So you kindly waive it, because usually you must have seen in their blue book, it has not been erased. And after some years, they will come out with that your something is pending and all that. So I would be better if we can put it into that and make an application. That is what is a suggestion. That is what I can put it. Though they have made it that it would be wiped off, I don't think so. That much trouble anyone would be taking it. That they would be on their suo moto, they will do it. So that is what I think one has to be careful about. And now I think nothing much to add on that. You have explained, Jitesh, you have explained everything. Now, if the participant, yes, someone has now already put a query. Jitesh, you can reply. Santosh ji has put a query.
This is in relation to 50 lakhs tax amount or total areas. This is total areas.
I think he wants to understand if it is more than 50 lakhs.
Then also application, application can be filed with the, but lump sum option is not available. Here, on that calculation is to be made based on the composition of the tax area.
One time option sort of a thing where, yeah. So I think that was to be clear. That is now we have cleared. I'm very happy. I was also to tell you that above 50 lakhs, you can go, but lump sum option is not available.
Yeah.
Anyone else? I think Hiral bhai.
Yes, sir.
Anyone else? I think
No.
there are some 6 chat box you can. What are there? I don't know.
Nothing, sir. This was the only query.
No query.
No, sir.
I think then kudos to Jitesh for explaining it. So there is no queries at all.
Absolutely, sir. Absolutely. It was wonderful. The presentation itself was very nice. I would now request JCF South Central Mumbai Secretary, Shri Abhay Sakaria ji, to please give a hearty vote of thanks. Abhay ji.
What about the mementos, Hiral?
Mementos will reach home, sir.
Home delivery. I am in love with Abhay when he gives memento. They are always something very different.
Yeah, definitely, sir.
The president has already put that. I think what was that mantra? This on his gate only on the house. I think
Yes,
Pankaj bhai is in or he's not in.
No, he has left the session.
Okay.
Thank you, Pradeep bhai, for your kind words. It's indeed a great privilege to propose a vote of thanks. First of all, I would like to thank our today's chairman and JCF Mumbai President, CA Pradeep Kapadia sir. I would like to thank our today's speaker, CA Jitesh Jain, for such a wonderful insight of amendments of recent in the GST. Then I would like to thank our Apex President, CA Shantilal Kochar sir, for giving you guidance on time to time. I would like to thank our mentor for JCF SCMC chapter, C. Amrit Porwal sir. I would like to thank our CCM Piyush Chajet sir for attending the session. I would like to thank our host, today's host, Hiral Bhai. And friends, JCF gives such a good opportunity to all its members, so you can connect to us if you like to give on any of the sessions. Thank you everyone for joining us.
Thank you, Abhayji,
Over to
for
you,
the wonderful work. I would just note the presence of Mahavirji and the team of JCF Pune as well for joining in.
In short, I think, Abhay, it is connecting, collaborating, and celebrating. That is GCF.
Correct, sir. Correct.
Thank you, everybody.
Thank you, everyone. Yeah, thanks. Excellent. Hiral, thank you for taking up the challenge in the last moment also.
Arre, no, sir. All the time ready.
Great. Thank you.
Thank you, Abhay.
Thank you.
Jitesh ji, see you soon. Thank you.
Yeah. Chalo, let's see. We meet physically now again. Mahavirji, pranam.
प्रणाम सर जी, जय जिनेंद्र, थैंक यू वेरी मच। आपने इसको ऑनलाइन किया, इसके कारण से हमको लाभ मिल गया, इतना अच्छा ज्ञान मिल गया।